I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning, everyone. I'm T3 Live Editor-in-Chief John Darsie.
And I'm Birttany Umar, and together we bring you Morning Call. So futures are basically flat this morning after the Fed's upbeat Beige Book report yesterday, G20 that gets underway today, and jobs tomorrow. And all of this, of course, coupled with Syria headlines. So a lot of headlines out there. How do traders make sense of them?
Yeah, like you said, futures are near the flat line this morning. World markets are pretty quiet, mostly positive overnight. And the U.S. markets have largely been beholden to those Syria headlines, like you said, but it seems like any action in Syria is on hold for at least a week or so as Congress goes through the voting process, whether they're going to authorize it or not. Then you have the G20 Summit coming up where you have all that diplomatic stuff going on that could delay any potential military action there. And so the focus has shifted a little bit more to an improving economy. And like you said, we had a decent Beige Book yesterday. We have some employment stuff coming up with ADP jobless claims today, and then the jobs report tomorrow. So yesterday the market was able to come up for air a little bit.
So why don't you show us the key levels that we should be watching?
All right, you can take a look at the chart of the spiders here. On Tuesday we had that surprising gap up. Many expected military action to begin over the holiday weekend, potentially in Syria, but instead you had the president come out and say he was going to wait for Congress to authorize any potential strikes, and that led to fear sort of dissipating and the big gap up. But then we faded from that gap and we closed the entire gap before bouncing into the close of Tuesday's session, largely due to the fact that John Boehner, the House Speaker, came out and said that he supports the president on potential military action in Syria. And it seems like a consensus is building a little bit towards actually authorizing those strikes, as the Senate Foreign Relations Committee actually voted in favor of authorizing a strike. But then yesterday, it surprised people a little bit. The market's keeping everybody guessing right now. As after that weak session on Tuesday, after the gap up, many would have perhaps expected the market to continue lower, but instead, yesterday we opened near the flat line and then had a really strong session as we closed back above Tuesday's high. We filled this gap that we had about halfway filled with the gap up on Tuesday, and now we're sort of in no man's land right now as we've filled that gap and traded up into some resistance. So not surprising to see a flat open here this morning.
So if we get a positive jobs report tomorrow, do you think the market could actually read that as bad news, as that could strengthen the case for pulling back on QE?
You know, I think since the talk of QE tapering started, I think we've actually shifted back to a good is good and bad is bad environment, which I think is an overwhelmingly positive development for the market. We're not in this distorted environment of, we get some good jobs data and we're like, do we short that? Do we buy that? What do we do? You don't like to see those types of things because you want to see the economy improve, and you want to see that be the impetus for the market to get better. But the jobs report will be interesting. I don't think that a jobs report this close to the Fed rate decision on potential QE tapering, I don't think that it'll influence their decision all that much. If it does, their focus is way too on the short term. But it is interesting to hear at the G20 Summit, leaders from China, leaders from Russia talking about basically warning the U.S. against tapering QE because they think that the world economic recovery is still very fragile, and that pulling QE off the table or starting a tapering calendar would perhaps spook the market and endanger this really fragile recovery still. So I don't know how much the Fed is going to keep their advice in mind, but interesting to note some opinions on that. And I think sort of the sentiment is moving more towards delaying QE tapering than actually tapering in the September rate decision. But it'll be interesting to see what the noise is leading closer up to the decision, which is in later in September.
Well, meanwhile, if we could turn the spotlight on some sectors, tech is remaining one of the best performing sector. And we saw some tech leaders that had been resting actually play catch up yesterday, names like Google and Amazon. Yeah,
I mean, rotation has been the name of the game in this market in 2013. And we've seen a group of tech leaders really take the mantle recently and been really strong. I'm talking about LinkedIn, Netflix, Tesla. Those are the names that we've been highlighting repeatedly on the morning call. Facebook now. as ones that are leading the tech sector higher in the absence of some leadership from some previous leaders, names like Google and Amazon. And those are names, and even Apple yesterday, after a period of rest, was able to catch back up a little bit. I guess I can just go straight into the charts of those. You talk about Google. Google obviously had a really strong move yesterday after a nice 3-day move. You know, it closed on Friday really weak. Had some people leaning more to the downside after it broke below this little support level here, just barely. But then we've seen a really nice 3-day bounce to shift the composure in this stock. Now you have the 8-day moving average curling up, and you have the 21-day moving average starting to curl up. It's sort of right here at the 50-day. It's the 50 or 100-day. It's not marked on here, but a key moving average potentially serving as resistance. But it'll be interesting to see whether Google can continue to the upside, whether this is just sort of a reflex bounce. But it is interesting in general to note the snapback that we've seen in these ones that have been lagging and resting. Amazon also, nice 3-day move after that weak close on Friday. A big gap up. It didn't fade that gap like the rest of the market did. It accelerated off it, and then yesterday you got follow through to the upside. Now it's above all of its moving averages that are now curling up, so things are looking up for Amazon. And then you talk about Apple. The big talk has been about the September 10th event, where everybody pretty much knows they're going to unveil the new iPhone, the 5S, or whatever they're going to do. But then they announced a surprise event on September 11th in China, which there's been a lot of reports over the years of potential agreements with China Mobile, and they have loose agreements and things like that, but nothing really concrete to get the iPhone in the hands of more Chinese. And that's their real big growth opportunity. U.S. smartphone markets are a little bit saturated, but China is their big growth potential. And so people are excited a little bit about that event. They don't know exactly what it's going to be yet, but it was enough to gap the stock up yesterday, and it held the gap even though it didn't accelerate. Be interesting to see whether it holds that gap or people start to hedge their bets a little bit heading into both of those events.
Also showing strength yesterday, auto stocks on strong auto sales numbers. We're going to go in the trenches with some of those right after this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Auto stocks showed strength yesterday on strong auto sales numbers. We saw Ford and GM make big moves, and if you take GM, for instance, it did close on high, signaling potential continuation today.
Yeah, I mean, you saw really, like you said, strong year-over-year sales growth from the automakers, GM and Ford. GM was the bigger mover of the two. They said their sales jumped in the year-ago period almost 15%, up to about 275,000 units. So really positive numbers there. We go to the chart of GM. Get a visual of that. There you are, huge igniting bar. When you see an igniting bar that's that big, that envelops that many days of price action, that generally tells me there's more upside in store. And yes, you did get a 5% move. It's a little bit hard psychologically to chase a stock after that. If you'd like to, maybe wait for a little bit of consolidation to allow moving averages to play catch up and stuff like that. But I anticipate to see GM back here at July highs sooner rather than later. The next thing I'll have to contend with is this resistance right around here, which is around 35, 36, around the $36 area. So it'll be interesting to see whether it can climb above that. Like you mentioned, Ford, they grew their year-over-year sales about 12%. The move wasn't quite as potent as GM's, but still a really nice igniting bar that also tells me that I expect to see it back at these July highs sooner rather than later. It'll have to contend with this resistance the same way that GM does, but really nice move there in Ford. And the last one we'll talk about is Tesla. It didn't have any year-over-year sales numbers to report. And in general, the reason why Tesla goes up is not necessarily because of huge sales. Yes, they are growing their sales at a faster rate than Wall Street potentially expected to it at this stage. maybe thanks to all the positive buzz they've gotten over the Consumer Reports rating and the crash safety rating and all that. And Tesla just continues to hold up really well. I think a lot of short-term traders are really stalking it and eager to short it because it's very inflated in terms of the valuation right now, but it's been really stubborn. It hasn't really broken down like a lot of people have expected. It looked like it maybe put in a little bit of a top here on Tuesday as it gapped up to new highs and then traded back down below. But then it's been able to find its footing, and it found its footing yesterday. And it'll be interesting to see what happens with it today with the flat open.
All right, let's do some quick hits here. Let's talk gold, which we saw sell off 1.3% yesterday. Where do you weigh in on gold given the QE taper talk that continues?
Yeah, I don't tend to fall in that gold bug camp, the doomsday type of camp that says, buy gold until the end of days and it'll continue to go up because the Fed and central planning has entered us into this spiral, this feedback loop that's going to force us to continue to do things like QE. I'm more of at this stage, a gold bear, especially after this 20% bounce. And we've seen really bearish action in gold over the last week or so since that really strong move off of lows. I think especially as, whether or not you believe the Fed is going to taper in September or not, we're headed in that direction. Whether it happens in September or subsequent rate decisions, we have reached the maximum point of QE for the time being, and we're headed in the other direction. And that's going to be bearish for gold. Talk about the fear from the Syria stuff, whether or not that prompts people to buy some gold, who knows, but I think that would be a short-term transitory reason to be long gold. But you take a look at the chart, as you can see, some weak action over the past week since that really strong bounce off what Scott calls the blood on the street lows. We talked about how sentiment had reached such bearish levels here that you could potentially expect a little bounce, maybe even went farther than most people expected it to. But then, like I said, over the past week, it had a little bounce here as it appeared perhaps that we were going to authorize some strikes in Syria and potentially start a conflict there. But then as those headlines have started to slow down a little bit and as the process has gotten a little bit more deliberate, gold fell right back down and is sort of in no man's land here. It'll be interesting to see whether it can hold this uptrend from that low back in late June.
How about MGM? We talked about this casino stock the other day in Morning Call as a breakout candidate above 18 and a casino to watch, and we did get that breakout yesterday. So now what are the levels to watch? Yeah,
2 weeks ago we highlighted MGM Wynn as Mark Sperling's trade idea of the week because we saw some strength coming into the casino stocks. But MGM has actually been the stronger of the two, but it was a little bit more extended at the time. So we decided to go with one that's a little bit more in a base. Then yesterday, MGM continued to be stronger than the rest of the group, but again closed off the highs, which gives you a little bit of pause and tells you that it may not be ready to have that commitment to the upside yet, but a really nice action there. You could watch yesterday's high as a potential point of reference if the market does remain strong, if some strength continues to be focused in these casino stocks. MGM, I think, is the best one to turn to right now and could provide you some upside out of this upper level base.
And checking in on an energy stock, Schlumberger has been consolidating at upper levels. Where might we get a breakout here?
Yeah, oil prices have been sort of jumping around based on those Syria headlines because initially, oil jumped because it seemed apparent that we were going to definitely enter some sort of military strikes in Syria. Then it fell back down a little bit as that was sort of on hold. But then you've seen Schlumberger's oil service sector continue to hold up, and it has jumped around a little bit due to those headlines, but not as much as the underlying crude. You take a look at the chart of Schlumberger, which is always a mouthful, and it yesterday tried to break above this pivot from August 28th. The high of that pivot is 83.33. So I think that's a nice area to watch if you're looking for a calculated potential entry. And you could also talk about yesterday's high. But this is one that has a nice gap up and upper level base, which is one of our favorite patterns, and one that I think could potentially get back to these pivot highs and even beyond. Based on the strength in the chart.
And in retail, Under Armour had a small breakout yesterday. Do you expect continuation there today?
Yeah, it's just another stock that I was looking around charts last night, and this one has a nice little setup. Under Armour just continues to impress. Another one that it trades at a pretty lofty multiple and has a high valuation, but continues to perform and sort of grow into that valuation a little bit. Take a look at the chart of Under Armour. You can see a gap up, sort of a rising channel here, which is good. It's obviously bullish if the channel's rising, but if you get a breakdown below that channel, it can be bearish. But then we have a nice pivot here, 74.45 that we broke above yesterday, and you could potentially see Under Armour get some momentum here above what look like 52-week highs.
And how about 3D printing stock, 3D Systems? It has lost some momentum recently. What do you think about playing this one?
Yeah, 3D Systems was Mark Sperling's trade idea of the week this Monday, as the sector had been strong. It got upgraded by Citi a couple weeks ago, Stratasys and Triple D. And in general, the sector has been on fire the last couple of years. It's been billed as the next big thing, the next big game-changing sector, and the price action has matched up with that thesis. But you take a look at the chart of DDD, you can see it looked ready to go, it looked primed to go at the beginning of this week, but then that broad market weakness just continues to sort of weigh on the stock. We were weak during that session after the gap up, and then yesterday it gapped up and held again. So it is holding up well and showing some nice bullish composure, but the question is going to be whether it can get that momentum during one of the sessions to really break out, and I think it can. I think it's just a matter of time. Maybe some rest is good, allow the 8-day, 21-day to play a little bit of catch-up. This is one that I think will eventually break out as this sector continues to be on fire.
All right, so of course we do have G20 today and jobs tomorrow. What's your advice to traders in summation about how to approach trading?
And we also have Rosh Hashanah, which is another thing to factor in terms of volume. Volume is typically light during these types of Jewish holidays. There's some theses that were talked about yesterday in the media heading into the holiday of sell on Rosh Hashanah, buy on Yom Kippur. So maybe you'll see a little bit of that be a self-fulfilling prophecy today. But like you said, some headlines to wade through, none as big and explosive, no pun intended, as Syria. But those are all things that maybe the focus will shift a little bit more back to economic growth, policy measures, and things like that, which is good and bad. We've gone from speculating about Syria to speculating about QE again, but perhaps we can get some strong data that can be perceived as good for the stock market for a change, and we can actually see the market build on yesterday's big bounce.
And that's your morning call for this Thursday. Happy trading. Have a great day.